Take a moment, look at the disclaimer. This content for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how BTA analyzes the market, how we look at the market. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we're not going to get out at the exact top, but we will. We are going to make money in the middle. Okay, this is part 2 of our end of day ETF analysis for Wednesday, July the 6th, 2022. We got a daily chart. We got a weekly chart of Apple up here right now. A weekly chart of Apple, but we're going to get away from that. But on this weekly chart of Apple, I will say one thing. I told you, we're going to have to look at the FANG MTs. Okay, we got to take a look at the FANG MTs. All right, you see it? You see that moving average right here? See that 100-week moving average? See that 100-week moving average right here? Well, we closed above it today. We're above this four-week moving average. We're above the green 8-week moving average. And we closed above it today, above the 100-week moving average. This is a weekly chart. The week is not finished yet. That's the weekly bar right here. It's still forming. It's still forming. It won't be finished until Friday. It won't be finished until Friday, but we are back above the 100-week moving average. Okay? See it right here? Purple looking, magenta looking line. You see input? 100 week. You see that? 100-week moving average. 150, 200 right here. Okay? So the 100-week moving average, we're right there. But look overhead. Look overhead. See that yellow line? That's a downward trending 13-week moving average, 1 quarter. We closed at 142. The 13-week moving average, the downward trending 13-week moving average for Apple is at 147. Be careful. That's 1 quarter, 3 months of average pricing. Be careful. We could get up to that 13-week moving average and get rejected. Be careful. Okay, let's look at the DIA. Let's start off with the DIA, the ETF that tracks the Dow Jones Industrial Average on the weekly chart. Well, we're back above the 150-week moving average, okay? That's great for the DIA. There's no doubt about that. We already know, we talked about it in part 1 on the daily charts, we're stalling at the 21-day moving average. Well, we're back above the 150-week moving average at 306.60. And right now, price is at 310.41. Okay, and we're above the 4-week moving average, the white line. But you see that downward trending 8-week moving average right overhead? Wasn't that the moving average that gave us all the trouble before? You remember? Do you remember that? That downward trending 8-week moving average gave us all the trouble before. We traded up to it, kept getting closing right on it, got rejected, and it collapsed. Well, we're coming right up against it again, y'all. Downward trending 8-week moving average, 315.40. We closed at 310. You already know I'm waiting. All right, we did find support at the 150-week moving average, and we bounced off of it. But we got that downward trending 8-week moving average looking right at us, right overhead. We got a downward trending 50-day moving average on the daily chart. We got a downward trending 21-day moving average on the daily chart. Downward trending 8-week moving average on the weekly chart. Be careful. Be careful. Be careful. Look at the horizontal, look at our structural chart, right? We saw the horizontal support levels. It held, right? At 306, the top line's at 306.28. The bottom one is 304. Okay, we held, all right? We held that. We bounced off of it this week and we rallied up. But now, look where we at. This internal trend line. We traded up to it this week. We traded up to it for the last 2 to 3 weeks. And we cannot seem to get above it and hold above it. You see that. We traded up to it the last 3 weeks in a row. Well, 4 weeks if you count the one that totally got rejected on. Okay, let's look at it. All right, here's the internal trend line right here. Going all the way back to the March 2020 lows, going across this fractal. 1 week, got rejected. 2 weeks, couldn't hold it. came right back, got rejected at the trend line again. Here, 4 weeks, we playing around that internal trend line. Well, let's see what happened. The good thing about this here chart is that we held the support. We held the support, the horizontal support levels right here. We held it. Okay, we held these horizontal support levels right here. We did hold that. But now we're testing this internal trend line. Let's see what happened. 8-week moving average right overhead. 21-day moving average right overhead. Be careful. Let's look at the SPY. Okay, the SPY, it did hold the 380.54 level, which is right here. We did hold it. Okay, we did hold this horizontal support level. We traded right down to 371.88 again. Now look at that 371.88 level. You see how this thing is starting to be the level where we find the support right now for the last 3 weeks? 371.88 is starting to be the level. 371.88. If we break back below 380, I would look at 371.88 to be a very strong support level. Let me zoom in on this so you can see it. You see that? This 371.88. Here's the 380.54 level right here. Every time we break below the 380.54, we come right to almost to the penny of the 371.88 level for the last 3 weeks. If we get rejected here, we get rejected at the 21-day moving average on the daily chart. This is a weekly chart of the SPY, the SPY, the ETF that tracks the Standard & Poor's 500. If we lose 380.54 and we trade down to 371.88 would be the next level of interest that I'll be watching. If we break below that, it's been strong for the last 3 weeks. We might come back down to 359. Look, it's just something to think about. First and foremost, the SPY, we have to get above these upward trending internal trend lines and lower trend lines going all the way back to the March 2020 lows, just like we saw on the DIA, the previous chart. That's what we're looking at, okay? Let's look at the moving averages, the weekly moving averages for the Standard & Poor's. You see that overhead 8-week moving average? We found support just like the DIA. We found support at the 150-week moving average right here. We bounced. Okay, we got above the downward trending 4-week. We got above the downward trending 8-week. Well, I'm sorry. We did not get above. We did not get above. Did not get above. Okay, sorry about that. The downward trending green 8-week moving average. We know that thing has given us problems before. But we did find support at the 150-week moving average for the SPY. I will hand it that much. Okay, look at the DIA. See that 150-week moving average? We found support for the DIA at the 150-week. For the SPY, we found support for the DIA at the 150-week moving average. Now, we only got 2 more days of trading left on the SPY. Okay, Thursday and Friday. That volume is mighty low. Okay, so if it is to get a accumulation week, okay, we need to see that volume start coming in. And it looks kind of similar on the DIA. You see that volume, how low that volume is for this week? This weekly bar is still forming, right? But look how low the volume is right now. We only got 2 days of trading left, okay? So it got a lot of work to do for that volume to start coming in. Let's take a look at the Qs on the weekly chart real fast. You see those Qs? You see why I'm telling people don't get too excited on these Qs? These Qs got a lot of overhead resistance looking at it, y'all. And the Qs are the one that's running the most right now. Out of all the major index ETFs, the QQQs, the ETF that track the NASDAQ 100 specifically, is doing the most right now. It's closing up the most and it's running the most right now. But look at it. You got the downward trending 8-week moving average right here, the green line. You got the 150-week line right here, the 150-week moving average line right here. Then you got a downward trending 13-week moving average right overhead. It's a lot of overhead resistance, y'all. I give it to the Qs one thing. We holding support at the 200-week moving average. We holding the 200-week moving average, okay? We haven't broke below it. But look at all this overhead resistance right here. When you look at all that overhead resistance, do you see all that overhead resistance? We got the downward trending 8-week moving average. We got a 150-week moving average right here, this purplish looking line. We got a downward trending 13-week moving average here. We just got above the 4-week moving average. So we got the 8-week, the 150-week, and the 13-week moving average all right overhead. All right overhead, and you see it on the daily chart. We run it up to the 50-day moving average. Be careful. I just don't know how to say it anymore. Be careful. You see where we stalled at today? Right at the internal trend lines coming from the March 2020 lows. You see that internal trend lines? You see these here? This trend line, this upward trending trend line from the March 2020 lows, right across this fractal. You see where we stalled at? Right on it. You see the internal trend line right here, also coming from way back at the March 2020 lows. We stopped a little bit below it. At the end of the day, we got to get above these internal trend lines. They're very strong long-term upward trending trend lines going all the way back to the March 2020 lows. Granted, we held support. Okay, we held support at the 280 for the Qs, 280.21. That's beautiful. That's the level I've been trying to get a nibble on every time it break it. It held it and it bounced today. Okay, it traded up. It closed at 288.80, and then the aftermarket is at 289. So it went up a few more pennies. But it's stalling right at these internal trend lines. We got all that overhead weekly moving averages right over our head. Okay? It's right over our head. The 8-week green line, the 150-week purple line, the 13-week yellow line. It's all right overhead. You see the volume on the weekly chart? It's not knocking the ball out the park. You see the volume. You see the accumulation distribution. You see the price volume trend. You see the on-balance volume line. It's not knocking the ball out the park. Okay, look, you see the weekly Bollinger Band stochastic MACD strategy over here? We starting to get back above the lower Bollinger Band. Yes, we've been above the lower Bollinger Band, but look at the stochastic. Still below 20. We got a bullish crossover, but it's still below 20. Look, y'all, overhead resistance. Be careful. Be careful. We are not trying to catch the bottom. Just not trying to do that. All right, here's the IWM, the weekly chart on the IWM. It's nothing to talk about on the IWM. We're going to go ahead and move on because guess what? If you can't get above this 200-week moving average and this downward trend at 8-week, but the 200-week moving average right here, I'm not trying to go long nothing that's below the 200-week moving average. Are you kidding me? Are you kidding me? And then if you get above this 200-week moving average, you got the 8-week moving average right on top of it. You got the 13-week moving average right on top of that. They all pointing down. It's nothing to talk about on the IWM. Be careful. Be careful. You see what the IWM is doing on the daily chart. Look at that internal trend line for the IWM. Ran right up to that internal trend line, hit it, and collapsed. Only thing I will give it is that you see that big, thick red line? Do you see that big, thick red line right there? March 2020 highs. You should not, if you're watching me, been following me right now with these videos, I think you knew what it was when I said that big, thick red line. Well, we did hold support and we got back above it, but we right at this internal upward trending trend line from way back in March 2020 lows. We stalling there and we still below the 200 week. This is the weekly charts we're looking at now, part 2. Weekly charts. Long term support and resistance level. You can't get above that. Be careful. All right, here's the ITOT structural chart. Well, we did get above 84.59, this horizontal support level. We got back above that. We held it. And we tested this 86.05 overhead resistance area here. We stuck right there for right now. And we got this internal trend line going all the way back from the March 2020 lows. We got that internal trend line. We got to get above that. So before I would think about even trying to go long on the structural chart, you can see it. It got to get above this resistance level at 86.05, and it got to get above this internal trend line, going all the way back from the March 2020 lows. We got to get above those two, and then I'll think about it. Okay, I'll think about it. But what is those moving averages telling you? Look out! Look out! Look out! We getting above the 150-week moving average. That's wonderful. You see that? We closed above it. We closed above this downward trend in 4-week moving average. But what you got right overhead? A downward trend in 8-week and a downward trend in 13-week moving average. Be careful. Go back to part 1. Look at those daily levels. You see it. Look, be careful, y'all. Be careful. We are not trying to catch the exact bottom. That's not what we're trying to do. We're trying to eat in the middle. See you in the next video.